Good afternoon. Thanks for joining us for August Director's Cut. We'll get started with Director Lynn Helms and June production numbers.
Thanks, Bethany, and thanks everyone for tuning in. It's August. We're talking about our June 2022 production numbers. And so happy to report a 3.5% increase in crude oil production. We fell slightly short of that 1.1 million a day that I thought we would achieve in June. A little bit of a surprise in there. Dunn County's crude oil production dropped about 12,000 barrels a day. And that was the standout thing. All the other counties, Mountrail County was essentially flat. The rest of the counties grew production, but Dunn County had a drop in production, and we're doing some work to look into that. We think that it is likely a gas capture artifact because they held their flared volumes constant while total produced gas went up and gas going into the gathering system went up. And so they probably are bumping up against, in some cases, limits on gas capture, and so reducing crude oil production. So we came in just 4,000 barrels a day shy of the 1.1 million that we anticipated for the month of June. Good, healthy activity in July. So we do anticipate production growth going into July, substantial production growth. August is a bit of a wild card. The operations, the plant shutdown at Robinson Lake has started, and there's also been some issues on the Northern Border Pipeline. So gas capture is likely to limit crude oil production, or at least limit crude oil production growth in the month of August. But a little bit of a wild card there, and can't really predict. Still anticipating that we should achieve 1.2 million a day by year end or in the first quarter of next year. So a 3.5% increase in crude oil production. Contrast that with a 9.7% growth in gas production. So we're back on that track as wells are coming on and now producing continuously following the pandemic. And then, of course, the April storms that we had, we're seeing that gas oil ratio start to increase again. June oil price statewide was $111 a barrel. We estimate that today it's about $89 a barrel. So significant drop there. And I'll talk a little bit about how that may be impacting operators' plans going forward. Happy to report 5 additional rigs as we went from June to today. June to July, the rig count stayed constant at 42. And if you recall, we talked about there being approximately 12 rigs sitting in the yard looking for crews. That's now down to 5, but still that seems to be the limiting factor in terms of drilling wells and putting new wells on. Even though we achieved a record well count, we're not at record oil or natural gas production. Close on the natural gas production, but certainly not at the oil. Waiting on completion is dropping, and so we're seeing our operators work through that inventory. 16 frac crews working today. There were 18 a month ago. That kind of jiggles up and down depending on mobilization and that sort of thing. But 16 frac crews working today. That should be sufficient to keep up with 48 rigs. So we're not going to make a lot of progress at 16 frac crews in terms of reducing the DUC well count, but we're not far above what we would consider just a normal inventory of around 300 to 350 wells. That's going to be our constant working inventory of non-completed wells. So we're approaching that, and of course we're way down from the 1,500, 1,600 that we had at one point in time. Really great news on the inactive wells. 100% plus workover rig deployment. There's a long wait list. We're hearing from operators that today, if they need a workover rig, the schedules are showing that it might be October before they get a rig. But You can see the deployment of workover rigs has made a huge impact on our inactive well count. It dropped by 700 from 2448 to 1750. So that's great news in that we're seeing inactive wells be put on. These oil prices certainly justify producing wells being put back on production. Completion numbers, I got to report a typographic error. Somehow I put 33 in for May. That should have been 53. Not quite sure what that June drop to 27 is. It may be a filing artifact with completion reports coming in, but July, great numbers, 74 completions, so well above revenue forecast, and that's why I'm predicting really significant production growth coming in the month of July. Like I said, record well count, 17,284 wells actually operating in the state. So we should be pushing those oil and gas production numbers northward again. I want to comment a little bit on what's happening with OPEC. You've noticed the oil price softening. OPEC decided from June to July to ramp up their allocations by almost 650,000 barrels a day, and again from July to August. So basically 1.3 million a day back-to-back production increases, and that has softened the world oil market. Now they've decided going into September, from August into September, it's only going to be 100,000 barrel a day increase. So we should see those oil prices firm, and again, depending on what happens in the demand area, but we've seen lower transportation fuel demand as a result of price and also the economy. And so that's resulted in some improvement in terms of inventories, and we're kind of pushing back into the territory of being closer to the average, but we're still significantly below average, below the 5-year average for U.S. crude oil inventories, and world inventories are also on the low side. Wanted to comment about some recent information that I came across. Drilling activity is expected to slowly increase, but the price needed to justify drilling a new well in the mid-continent based on a survey that was done by the Journal of Petroleum Technology is $65 a barrel. So we're above that. But long-term, EIA was talking about prices in that range. And so not a lot of pressure to add new wells. What was really interesting coming out of the survey was operators were asked what it would take to get them to substantially increase drilling. And they put that number at $98, which is well above today's oil price, WTI. So we're not anticipating a big spike or a ramp up in drilling activity. Again, just this slow increase in rig count and frac crew or completion crew count taking us through the end of the year. Natural gas prices are at levels that we haven't seen since August of 2008. So not only is there a gas capture driver to limit oil production and make sure that gas gets to market, but prices are really driving the need to move that gas to market. We maintained 94% statewide gas capture, 95% in the Bakken. And so you can see the gas capture numbers there looking good. We had one field, Deepwater Creek Bay, come off our watch list because they achieved the 91%. So we're just down to 3 major producing fields that we have on a watch list. And again, we continue to work with some flare mitigation technologies to try to get those numbers up. And particularly in Twin Buttes, we know that our gas gathering company is looking at a couple of options to get that gas tied in over the next couple of years. So great story on the gas capture. On the BLM leasing front, the DC Circuit Court accepted or granted our motion to intervene in the NGO challenge to the legality of BLM's quarterly lease sales. And so we'll be filing declarations, and so you'll want to track that It was Dakota Resource Council et al. Versus U.S. Department of Interior, a long list of NGOs there suing over the BLM lease sales, but the DC court has granted our motion to intervene in that. So North Dakota is going to be a player and present arguments on the negative impacts of what the NGOs are requesting. Wanted to talk just very briefly about what Congress has done and what's expected to be signed today. It's called HR 5376, more commonly called the Inflation Reduction Act. There are a number of sections of that we think are going to have a negative impact on oil and gas operators in North Dakota. And so we're in the process of analyzing those. There's the corporate alternative minimum tax, the excise tax on repurchase of stock, the advanced manufacturing production credit for critical minerals, methane emission reduction program, and the Mineral Leasing Act modernization. All but a couple of those are anticipated to negatively impact industrial growth in North Dakota. So more to come in that area. That was my direct comments, Bethany. So I'd be happy to try to answer some questions.
Sure. What do you feel is the biggest hurdle to growth in the Bakken over the next couple of years? And do you believe this basin still has an upside, or have we seen peak production?
Yeah, so a couple of questions there, maybe kind of a bundle of questions, but it's pretty clear talking to operators and to the service companies that our number one hurdle is workforce. It is just extremely difficult to attract workers to North Dakota to get back into the drilling and the hydraulic fracturing and the well completion and work over rig jobs. So North Dakota has begun to really focus on career and technical academies, career and technical education to try to grow our own workforce. But over the next couple of years, that really is going to be the most difficult hurdle to overcome. It's taking these service companies that have 7 drilling rigs sitting in the yard 2 to 3 months to hire and train a crew and really put together a full crew and deploy them to the field. So with 7 rigs, we're talking 14 to 21 months just to get those 7 drilling rigs in the field. And they're seeing similar things with hydraulic fracturing and mobilizing frac crews. Number one hurdle is definitely workforce. So are we at peak production? No, we really believe that within the next year, production is going to grow to 1.2 million barrels a day. And looking a little bit further out, we think by the end of the 2020s, we can achieve and sustain 1.4 million barrels a day. So it's a slow growth curve. And again, like I mentioned, it was interesting that survey really fits with what we're seeing as far as industry activity. $65 to justify drilling a new well, $98 if you were going to really try to add a rig and put more production on. So our anticipation is slow production growth. We are not at peak production yet.
Let's see. Do you see any issues with the EPA limiting or suspending oil and gas leases in North Dakota due to sage grouse, similar to what is going on in Colorado?
Yeah, so it's the Endangered Species Act, and there is a lot of activity centering around the sage grouse. Sage grouse habitat impacts a very small part of North Dakota. So we have one natural gas field that's heavily impacted in southwestern North Dakota, and then our one large enhanced oil recovery project. But that EOR project is fully drilled out, and so it may cause some minor delays in terms of plumbing and the construction of CO2 capture facilities, but those are already well underway and plan to be implemented by this time next year. So no, we don't see anywhere near the impacts in North Dakota that we're going to see in Colorado, Wyoming, and Montana from listing of the sage grouse.
Let's see. The Inflation Reduction Act requires companies that lease federal land to pay royalties on any gas they flare. You've said about 25% of North Dakota's spacing units contain federal minerals. How will that provision impact North Dakota's industry? Will they have to reduce flaring, pay the royalties, or avoid drilling federal minerals?
Yes, so pretty much all of the above. So yeah, the impacts are going to be significant. At least 25%. I think in some cases we've estimated as much as 30% of our spacing units contain some federal minerals. And in order to fully develop that spacing unit, they have to sign a communitization agreement, which means that federal rules have a lot to say about venting and flaring. So the fees on flared methane, the royalties on any lost or leaked methane are going to be significant factors. And so undoubtedly, we're going to see activity shift again further away from developing that 25 to 30% of our spacing units that contain federal minerals. That's very problematic in that our tier 1 area, which is about 80% developed, doesn't have a lot of federal minerals in it. It has some, but less significant than the tier 2 and tier 3 areas. The tier 3 area in particular, which is further outside the Bakken core and is only 25% developed, has a lot of federal minerals. And so this is going to slow the development out there. And it's unfortunate because the technologies have been developing to turn particularly tier 2 area in the core area. With we're seeing about 75% of the permits coming in are now for 3-mile laterals, and a lot of spacing applications to respace to 3-mile laterals. That technology has turned tier 2 wells into what would have been tier 1 wells a couple of years ago. And so this comes at an unfortunate time. And again, it's going to be stepping on the brakes, particularly for the tier 3 area. And we were anticipating operators testing some 4-mile laterals this year. That hasn't happened yet, but that could really flip the switch on those tier 3 areas. But the federal government keeps pushing back and doing many things to tap the brakes on our tier 3 area.
All right, that's all we have for you, Lynn. We'll turn it over to Justin.
Right. Thank you, everyone.
Great.
Yep.
Perfect. Well, thank you. Good afternoon, everyone. Justin Kringstad, Director of the North Dakota Pipeline Authority. We'll get right into talking about some of the production here in our neighboring states on slide 2. The one surprising thing that stood out to me right away was taking a look at eastern Montana. April, we know, was an extremely tough month in western North Dakota, and eastern Montana actually saw a very slight growth, and so they must not have had the severity of the power issues that we had and the blizzard events. More concentrated on the North Dakota side of the plate, appears, and then South Dakota again holding steady with their production. When we look at slide 3, again, month-over-month growth, particularly on the natural gas side, 2 back-to-back very large months of growth. And then if we look down at the bottom, we did set a new record for gas-oil ratio in North Dakota at 2.79 from a statewide perspective. So we're back on that growth mode after a down month, but we're going to continue to expect that number to continue to climb on a trend going forward for the next number of years. As we look forward, let's skip past slide 4. That's just a single snapshot. But if we look at the longer term trends, continuing to see the trend with the blue, which is our pipeline, export market share continuing to grow, the crude by rail market share continuing to shrink. We'll talk here in a few moments about price and some of the drivers behind that that I think are pretty telling. When we look at what May pricing was doing around the U.S., this was, again, one of those things that when I was putting the numbers together, really shocked me a bit, looking at the PAD 1 pricing versus PAD 2 and PAD 5, the Midwest, almost $10 ahead of the East Coast pricing, which is typically almost a flip-flop that we've seen historically. So we've seen in 2022 extremely strong Midwest pricing. We've seen that at Clearbrook. I'll have those prices here in a moment. But again, very, very strong pricing in the Midwest, Cushing and North. It's been a real good scenario for North Dakota producers. The June discount on average was just under $3 per barrel. When we look at crude by rail, again, just short of 100,000 barrels per day in June. So those numbers have continued to trend downward as those strong netbacks to the traditional pipeline routes are continuing to attract barrels. And those barrels on slide 8 that are continuing to move out by rail, the West Coast continues to dominate that. And if pricing, again, the slide we were looking at, the East Coast PAD 1 versus PAD 5, I don't know if that's going to be a long-term trend. We'll see. But again, if that was the case where we saw weakening prices on the East Coast, we would continue to see this trend of West Coast attracting the majority of the barrels leaving North Dakota by rail. And then where we sit today, that Clearbrook pricing north of $4 per barrel, premium to WTI. Cushing, again, somewhat weaker, almost $6 as of today relative to Brent, and so that has trended back in the opposite direction. We have seen some refinery utilization and things improving here in the recent days in the PAD 2 area, so we'll keep a close eye on this. This could be moving quickly as we go forward here. Imports, exports, no real big shifts in those. Natural gas flaring, again, May to June, consistent. The numbers did not change, and so we're seeing a real willpower by the industry to continue to stay on top of this challenge and continue to, again, on slide 13 here, get wells connected to gas gathering quicker than they're being brought online from the drilling and completion side, which is always encouraging. There was always some slight backlog of wells, and so as the industry has those opportunities that it can catch up, we are seeing them do that, and that's continuing to hold those numbers down. On slide 14, taking a look at what the EIA is projecting for their oil price outlook, they shaved another $1 off their August price outlook. And so they're looking at the upper 80s as we look out over the next 2+ years. Slide 15, things continue, at least in the near term, to look real solid on the gas gathering and processing front. We know, and I state this almost every month, we're not taking our eye off the ball on this. We know that this has been a long-term challenge, and we know that this window is not going to be forever. So we're going to stay on top of this and do our best to work on the forecasting side as well as the solutions to address the increase in gas volumes. On the natural gas pipeline infrastructure, I will quickly note the natural gas grant program did have a closing date yesterday for that grant round of August 15th. We did not receive any applications for that grant round. I'll be in front of the Industrial Commission at the end of the month, and we'll discuss next steps at that time. So stay tuned on that front if what those next steps might look like in lieu of not having any applications for this round. When we look at Northern Border, we're continuing as our production has been growing, now taking over more of that market share on that pipeline system. BTU numbers on slide 18 have continued to creep up, meaning we're starting to see a little bit more ethane making its way into the Northern Border system. We'll keep a close eye on that. Again, there's been no public discussions by any parties about any type of limits on here, but I continue to just have that reference marker relative to what we saw in 2020 with those discussions about that being a benchmark limit for North Dakota. And then lastly, I want to talk a little bit about something that happened on Sunday here at the Zeeland, North Dakota Compressor Station on the northern border pipeline system. There was an equipment failure that reduced the overall capacity. It reduced the flow capacity by 318 million cubic feet per day. That brings the current restricted capacity on the northern border pipeline to just over 2 BCF per day. And so when we look at, again, market share, the brunt of that capacity restriction will be felt by the North Dakota producers. And so some just real rough numbers that I put together on that. Assuming that we do not see a ramp up in any type of flaring as a result, if we continue to see operators have the discipline that they have shown over the last number of months, that could result in roughly 1.43 million barrels over the next 11 days being taken out of the marketplace. When we look at on a daily rate, that's about 130,000 barrels per day potentially of an impact to North Dakota during this event. Again, it was not planned, an unforeseen and unfortunate situation that the industry is going to adapt and adjust to. And then when we take a look at current pricing, tax rates and things, that totals out to be about $12.7 million for the state of North Dakota, and then significantly more for the royalty owners and the operators as a result of any lost oil production because of a lack of gas takeaway capacity here in the state. So this is a challenge that, again, industry, or I'm sorry, the company is anticipating August 25th. They'll have the system back in full capacity. If anything changes there, I'll continue to answer any phone calls or emails if people have questions about this event and how it may play out here over the next week or so. So with that, Bethany, I'd be glad to answer any questions.
We don't have anything coming in. If we just want to give it a minute, maybe. Well, thanks everyone for joining us, and have a good afternoon.
Yeah, thank you.